and welcome to BloombergQuint. Hi, this is Nikki. Tata Steel has reported highest ever EBITDA and PAT for the June quarter, whereas volumes were impacted for the second wave. But how do the margins stack up going forward? Let's understand from the Executive Director and the CFO of the company, Mr. Koushik Chatterjee. Mr. Chatterjee, it's indeed a delight to have you with us right now. Without a further ado, I'm just going to get on to the margins front and ask you about your standalone EBITDA per ton expectation that we could have from the second quarter. Are we looking at any cost escalations?
Yeah, so I think this keeps happening quarter on quarter. I think the June, July was soft from a market point of view, especially on the long products. But and also from the retail perspective because of the COVID disruptions. But we are certainly seeing the retail numbers being better. Automotive certainly looking and strong, therefore we certainly think that the price increases or the price trajectory will continue to be strong, and there are cost increases, of course, because as you can see that the coal prices have shot up significantly in recent times, and therefore they will be there. But most importantly is Tata Steel's own focus on cost takeout programs, which is an annual process, and irrespective of market, we keep working efficient metrics. So we certainly see that the strength of the synergies between Tata Steel entities in India will play out in the second quarter also.
All right, Mr. Chatterjee, I've been wanting to speak about the price hikes because I've spoken to JSPL and they said that they're expecting the prices to moderate going forward as and when the cost pressures actually ease. But JP Morgan has given an estimate of around 3,000 to 5,000 rupees per ton in the second half of this calendar year. I wanted your assessment of what kind of price hike are you seeing in the second half, in the second quarter, and do you think you'd be able to surpass that standalone EBITDA per ton of 33,000 for the second quarter?
So EBITDA is a function of many things. EBITDA is a function of price. EBITDA is a function of the volumes, because this quarter we had lower volumes for multiple reasons, and we expect to increase our volumes in the second quarter. So the volumes will increase, and we will certainly see some element of costs also movement because of raw materials. Therefore, we think that this globally, if you look at the steel cycle or the commodity cycle, are in a very strong position at this point of time. The supply reforms are playing a very significant role in that too. So therefore, I think we are in a good position for a strong second quarter too. I won't get into the numbers so soon in the quarter, but I would certainly saying that we are stable operations, cost takeout programs, efficiency programs are in place and are working, and the market dynamics we will play it as it unfolds.
Mr. Chatterjee, any price range, a price hike range that you can help us understand?
I normally don't talk about price hikes or reductions. I think it is my commercial colleagues play it based on the market, but essentially a lot of it is also depend on supply demand equations as well as what's happening globally.
Mr. Chatterjee, a word on your European unit EBITDA per ton. That's almost 35% up sequentially, but a part of analyst community found the number of $89 per ton a little weaker than expectations. Also because of raw material cost pressures at play. What can be expected going forward from this division?
So we've explained to the analysts also that there is a contract mix and a portfolio mix that has its play. Yes, the increase has not been in respect commensurate with the spot increases in price, but the spreads will increase significantly in the second quarter because of the simple reason that there is a lagged effect of the contracts that comes in. So every contract that comes in for renewal gets renewed at a higher price, and what's going to impact the spreads also. So we certainly see a spread expansion in the second quarter, simply because we are catching up from the past, as well as fairly firm level of price increases that are happening in Europe and the world.
Okay, could you also explain about your working capital build-up for the quarter? I think it's at 82.7 billion rupees for this quarter. What kind of working capital until now has the company been able to spend for this September quarter?
So I think the working capital increase has two parts. One part is the physical part. How many in inventory, for example. How much inventory are you holding? The second part is in relation to the value part, which is the price, whether it is in raw material prices or whether it is the finished goods prices and so on. So we did have lower deliveries, as I mentioned, that about 500,000 tons lower uh, than what we had in the previous quarter. So we will certainly have a higher deliveries in quarter two, and this uh, caused us to have a higher level of finished goods inventory, which we will liquidate in the second quarter. The raw material inventories are actually quite in control, and debtors value has increased because for the same number of days, it is now worth more. So I think that is why there has been an increase in the about 2,500 crores in India. The increase is higher in Europe because they buy the entire raw material basket and the value chain is longer. So we see that in India the reversal will start happening from second quarter, and in the third and fourth quarter we should be in a much better position from a working capital release point of view, and we should see the same in Europe. So the second quarter will show us lower level of increase as far as Europe is concerned, and third and fourth will start releasing cash.
Okay, Mr. Chatterjee, your current debt, I think that stands at around 739 billion, and you're committed towards a debt reduction of $2 billion overall for the financial year. How much do you think the company would be able to do in the second half of the financial year?
In H2,
Yes.
so I think we are chasing effectively similar level of debt reduction as we did in last year. It's we this quarter we've reduced by about 5,800 crores. We'll continue to do so in the rest part of the year. As we said that if the underlying trading conditions are strong in the second quarter, we will do that also. So I think our overall messaging is that we are pursuing a similar level of reduction as we did in the previous year.
Okay. Also about your CAPEX. CAPEX for the quarter stood at around 20 billion, and overall it's estimated to a range of around 100 to 120 billion for the entire year. How much of that would be spent in the second half of the financial year? And also, I wanted to touch base on the expansions that you have going in the CRM pellet plant and also 5 MTPA KPO. When will that be commissioned?
So our first focus this year is certainly on the cold rolling mill plant and on the pellet plant. That's where we are putting most of the capital. We had disruptions because of the mobilization of people in the second wave, but that's slowly coming back. And we are focusing on the completion in the first half of calendar 22. And also in relation to the second half of the year, I think, the construction activities slows down a bit because of monsoon, etc. So post September again they will pick up, and in second half we do expect majority of the capex that we have budgeted or guided for will be during the second half of the year.
Okay, last question before I let you go, and this one is a broad one that I have in my mind. Uh, from a very long-term perspective, that I want to know how different is Tata Steel going to be in terms of capacity, in terms of product mix, in terms of integration from the rest of the larger counterparts, because a lot of brokerages right now, they've upgraded their consensus estimates on how well the company could go forward. So I wanted to understand how different Tata Steel would be as compared to something like other larger counterparts without having to name them.
Very different from Tata Steel that we've seen in the past, fundamentally because it is strategically, financially, operationally, and capability-wise will be a lot more stronger, agile, and focused on growth and value creation. So I think that's like one sentence, but within that there are many initiatives that we have talked about even to the investors during our investor day, whether it is a new materials business, whether it is our new businesses on services and solutions, which is scaling up. We're talking about decarbonization as a very important theme as part of our sustainability. So we want to be the best in class and best in the business, and that's something that will get reflected as we implement the execution of our blueprint and our strategy. And we'll do it all in a manner such that it creates value for all stakeholders, not just shareholders. So I think that's been our focus, and we continue to do so.
And in terms of products mix as compared to your peers, how do you see that being different?
So I think we have a very strong and a rich downstream mix, which we already have. The positioning of that is to continue to make it bigger, so one on scale, and secondly, innovation, R&D, and technology is our prime thrust area, and that should help us in ensuring that we bring newer products. Our new product pipeline is very strong, and we should bring in new products which are something that the customers expect and beyond. And I think that should give us value for the business going forward.
All right, Mr. Chatterjee, we'll leave it at that. Thank you so much for talking, taking out the time and speaking to BloombergQuint. With this, it's a wrap. Thank you so much for tuning in.